going to keep it really informal, talk about some of the stuff I do, maybe how you guys use VWAP or just anything, technical analysis related. How many of you guys are familiar with my work? Okay, so pretty much everyone, cool. So like kind of what I do and that sort of thing. I've been really into the VWAP the last year and a half mainly. I mean, I started using it maybe 12 years ago. But I had TC2000 do this little anchor on here, and that, as you can see, is called the Anchored VWAP by Alpha Trend, so they were kind enough to put my name on it. But the point to this is that, unlike some software out there, you can point and click from anywhere on the chart and get your VWAP, from today's low, for instance. But the point with the VWAP is, so for instance, you can, and I often do, point it just even from a little, intraday little peak where we're reversing from. And then as the market gets back above there, if I'm not in already, if I feel like I missed a move, this will tell me basically from this point right here, the buyers are gaining control. And you could say, well, you could look at that and see that on the candles as well. But it just kind of gives you that idea of who actually has that control now. While that little VWAP is declining, so at that point it's a 7-minute volume weighted average price. And if I decide to get in and hold, from that point, let's say if I'm in scalp mode, and because I know how many of you guys, what's the main time frame, I guess, of you guys in here? Are you scalpers?
It's a mixture of everything.
Okay, so everyone's doing kind of multi-time frame strategies. Okay, it's easier to talk about obviously a very short-term time frame, but if you take a look at, so on Twitter I put this on here today. I've been noting this VWAP for a little while. Let me go to a clean chart. So here, this one, I have no idea what happened on February 28th of 2017. But the anchored VWAP off that level has just been absolute money. It's incredible. I mean, I wish I bought it there the other day. I didn't, and held it. But I was kind of thinking we were going to maybe rally a little bit off of that, break down and test the VWAP from the election, which is the orange line, of course, for our president. Anyway, so right now what I'm thinking is we're up to the VWAP off of this little peak almost. There's the year-to-date VWAP, and we kind of sold off into the close right to that. I think this is generally where this market is likely to peak out on this leg, either tomorrow or Monday, let's say. But I wouldn't, from a swing trade perspective, I would then go down to a shorter-term time frame, and you can see I've got these things drawn in all over the place. I like to draw them off of important swing highs and lows. So you can see that they tend to get clustered in here, and I was wrong yesterday. I thought we were not going to make it through this band of them, but they're like any technical tool that it's not meant to be, or at least I don't use it that way as here's the exact place to purchase. Sometimes you can do it intraday with a really tight stop, but on a longer term time frame, I don't think you want to short just because it's at a VWAP from 3 weeks ago or something like that. It's, as I like to call it, a level of interest. It's where we want to say, okay, now I'm going to take a much closer look on shorter time frames and see if there's something here that I can identify that gives me an actual reason to get involved here where I can minimize my risk. So that's a little bit about how I use it. If you're, you guys are familiar with my work, so maybe you see the tweets I do about them and that sort of thing, but I'm happy to just open it up here to any questions you guys have. Like I said, I didn't have an agenda here today.
When you're using it sort of intraday, are you kind of, in just hearing you talk about it, right? So like if we're putting on a trade intraday, like say you're looking for a momentum trade, like obviously it would make sense to, from entry, where's the VWAP from there as potentially a trailing stop or whatever. Like
absolutely.
Having to point and click, like.
Yeah, so.
Do you use it that way? Or
well,
have you used it that way?
Not from my entry because I don't always think my entry is the best, but from a reference point such as, we can see that the pivot was the low today. So I might add, one off of that. And this actually often happens a lot intraday. And what I'm saying, this may not be clear. So right here is you see that first little shakeout from the low, and then when it gets going, then you're pretty much money on that intraday momentum trade. So you can see here, that's something I'm trying to get them to work on too, is these volume by price bars on TC2000. They're like 50 cents wide, or they're kind of useless. They don't help much. They should be 2 to 3 pennies or something, so you can see where it actually is. I think they combine nicely together if you have a good volume by price, just because you can see where the majority of it occurred. So it's obviously like anything. I think all indicators are lagging. Some people say there's leading indicators. I don't see it. But so it's extremely useful from that. So for instance, this morning I put on a tweet about this morning about some of the levels I thought were going to be important today, which was the 2-day volume weighted average price, and then from the event. So this is a big event, obviously, where the Fed, had their minutes. And it, was in that area. I did try nibbling in there just for a little scalp, because I was angry about the bar, that big 2-minute bar, and I was like, well, I'll get a little bit back as it bounces from here, and then it didn't. But anyways, you guys know where I'm coming from on that stuff. But and I knew I only had a half hour left to trade, so I was like, I got to do something here.
So I see that you're using from important inflection points, like on an intraday basis.
Mm-hmm.
But have you ever tried to use it based on high areas of volume that transpire intraday?
Well, yeah. So, but most of the times that high level of volume will be, a turning point, generally speaking. So, for instance, obviously yesterday the Fed was from that volume point, and we can go from any point you want on here and find a high volume. It's basically the opens. So there was a high volume bar right there. It looks like. Right down here, if that lines up. Maybe I did it wrong, but yeah. So you can see from that peak too. Then as it regained that volume weighted average price, which is likely where the one for the day is as well. What I'll often do on a on a 1-minute chart as well is early in the day. If we have a gap, let's say. I will say, from the highs and lows, and what I'll do is I might make it. Let's just go here where I think it's blank. So here I might. So this is back to a 1-minute chart. Sorry for flipping around so much. So what I'll do is, I'll say, well, from the peak of this move, and which happened to be that volume bar as well, and then from the prior day's close, and I'll look at the intraday, from the beginning of the day. Sometimes it does pay, for the S&P in particular, it does pay, especially if there was an overnight range, to look at the futures and look at, because sometimes you'll see, maybe the futures VWAP is, 2 points, so 20 cents above where the VWAP for the SPY is early in the morning. It'll run right through VWAP where you might expect, there to be a little bit of selling pressure, but it runs instead right up to the ES VWAP and then comes off of that. So I don't have a science to that, other than I know that in particular when there's been an overnight range, that you want to be aware of the ES VWAP as well. Yeah.
Have you done any work with standard deviations from the?
I have not. I know there's a guy, Zach Hurwitz, I think is his name, who does that. I try to keep my charts as clean as possible, and if I'm looking at, let's say I'm looking at SPY and I'm holding, off of this, entry right here. I'll look instead of the intra, I might get out right there actually, probably would have got shaken out if I was long, right before that other spike. So I'll look for the higher lows on that 1-minute time frame, and I'll probably sell some off on a quick spike, and then maybe, trail the balance up underneath those higher lows that might be 5 minutes earlier, or as it replaces the one from 15 minutes ago. Now we have a new high, new higher low rather, 3 minutes later, and then I'll put a stop up under there.
Have you found like the distance traveled? So you mentioned 2-day VWAP, and that's something that we talk about occasionally as trade ideas of, I guess specifically when we've seen a reversal the prior day. So if something's run up, it reverses, and then it gets back up to 2-day VWAP. Are there any other things that you look at?
2-day VWAP, I love the trade setup where you had the stock breakout the prior day,
Okay.
and then it pulls back to the 2-day, what is now the 2-day VWAP. It's 1 day plus 15 minutes, let's say, and it pulls back down to that, and that will often be lined up with the daily pivot as well.
Okay.
And when you get that, what's now the 2-day VWAP with the pivot, and then it gets back above today's VWAP, it's still above yesterday, so it's pulled back, and now it's kind of coming back up. It's above today's VWAP, and now that to me is an important low because the event was yesterday, the breakout.
Yeah.
Now we've pulled back, we've shaken people out, and now with a stop underneath that low, you've got a good trade for maybe the next day and a half, 2 days even.
So you'll look at it from, you'll enter, so it crossed or went to 2-day VWAP, but then you'll enter above the 1-day VWAP.
Correct.
Stop below the 2-day VWAP.
Below the low for the day generally at that point, because we're talking like the first half hour of the day or so. So it might get back above today's VWAP, 20 minutes into the day.
Yeah.
It just tested it 12, 13 minutes off the open.
Yeah.
Cool.
Cool.
So that's real good. And when you just mentioned trade ideas, that reminded me that trade ideas, the software, the trading platform, analysis platform, I guess. I've got a good relationship with those guys as well, and that's what I was out there in San Diego, a few weeks back, and I lit a fire under their ass as well. So they're starting out. They're going to, they have the daily VWAP right now, and they're highly motivated. I think they'll probably have it by the end of the by the end of the year here. They will have 2, 3, 4, and 5-day VWAPs that you can do the back testing and scanning. So that's going to be huge, I think, to help you identify those.
What software is that?
It's trade-ideas.com. There are ways in TC2000 as well to create scans. I mean, there's some amazing stuff in there. So I'll go into, it's called My Condition Sets. So I've got a few of them here. So for instance, if I want to look for a, so I had down to the daily S2 or something like that. So this is kind of where I sometimes mess around. So above VWAP even, I can look at how many stocks, I guess, or so here there's 2,048. That doesn't really help you much. Okay, but you can say you can put in a VWAP from yesterday, create that as a condition set, they call it, and then you can scan for those. So you can say, show me the stocks that are within 25 basis points of yesterday's VWAP, but and yesterday's range was at least 2.5%, and it's below today's VWAP. So right in the first thing in the morning, you'll get a list of maybe 12 of those, sometimes 25, whatever. But you can just continue to filter. Say it's above the 5-day, above the 20, above the 50, whatever. And obviously, the more conditions you add to any scan, the more refined, or depending on how busy you are first thing in the morning, you want it super tight maybe. You had a question back there?
Yeah, about your VWAP strategies as well as anchor VWAP.
Mm-hmm.
Do you ever implement any automated or quantitative strategies around that?
I do not, but I'm actually kind of excited that Trade Ideas is going to add these, and I'm going to work with some of their guys to create some strategies, and I'm excited to implement some of those with quant-based trading. Let the machine do it, dial it in a little bit at a time and see how it goes.
Okay, thank you.
Have you found that there are types of stocks, like just following some of your stuff, like you tend to, it looks like you like, from what I remember, entering trades, you like kind of tight ranges to break out of, and
Right.
looking for kind of sustained moves and stuff like that. Are there types of stocks, whether it's like low float could be a basket, or market stocks could be a basket, or something like that, that you think works better on with the 2-day VWAP?
Well, yeah. So what were like the hot names today? I didn't even see. Like, were there any really good momentum names today?
I mean, Yeti got smoked.
Yeti. Oh, one of my guys wanted to buy that yesterday. I told him not to. That's good. So, yeah, Yeti. Let's take a look at it on 2 minutes. Let me go back to the other one. It's just a clean chart. So Yeti, for instance, right? It came public, and you know the VWAP from the IPO I reference a lot.
Yeah.
But it's all about how it gets there. So that was a good entry right there, you know, because it had this higher low leading up to it, and then it shit the bed, kind of held above that, and then you know it's kind of been a mess really. But if we take a look at the 2-day, 2-minute chart. I don't know why that other one's showing up, but so for instance, this morning, you know, it comes down, touches S2 perfectly. So at that low, you can put a VWAP above that and maybe enter long right here, you know, on this candle. It comes up to the prior day's VWAP. There's the 2-day, and then it comes down, dances on today's VWAP, and there's, you know, a nice short. You could say, you know, it gets oversold down here. Once you're maybe stopped out on this candle, you put a VWAP under there, and then this would be an entry, maybe a little shakeout. So then, you know, then in the afternoon, it breaks back down below, you know, this little low right in here, and it just kind of held on that nicely. So I mean, that's how I would look at a stock like Yeti, for instance.
But I mean, I was thinking more from a macro perspective of, do you see in like a low float?
Well, low floats that get the big volume,
Yeah.
absolutely.
Okay.
So I'll look at those little crazy names, and I'll go back on a daily chart and anchor off of an obvious peak from 14 months ago, let's say. And if it's getting up into that, I'll say, well, there's the average since that high. That was maybe a 5-year high it made 14 months ago. So that might, that's a level I want to look at as a potential resistance. Then you can say, okay, here's my zone. Now I want to start looking at the shorter term time frame and see if there's evidence that it is at least hitting, breaking down from the VWAP from the low this morning, or the daily VWAP, or what's the VWAP from the peak where it hit daily R2, right? So maybe it hits daily R2 and starts to come off or hang out under that. I'll pop a VWAP on that candle, and if it stays stuck below it, then it'll give me more confidence and to short it on a little break of a ledge, and then it comes down maybe to the daily VWAP, cover most of it, half of it, whatever, bounces back up again, and then comes down, and then then kind of lean into it there.
Yeah. Okay.
Do you use the pivot? Do you find the pivot points useful?
I do. Yeah, a lot of times they're the exact high or low for the day.
Because I did a lot of research on those pivot points. I actually have automated models that basically, if it breaks a certain pivot point, just buy it and then use the next pivot point as a target.
Right.
But it's sometimes it works, sometimes it doesn't. I feel like it works more for currencies, not for stocks, but maybe.
What I like to do is actually, so the stuff that I put on Alpha Trends is, I don't think that the average person out there should be day trading. I've been doing it for a long time, and I still have my, it's still in my blood. So I don't encourage people to day trade. I encourage them to swing trade and back up a little bit, be less emotional. You wouldn't believe the question, you probably would, but I had a guy, we had a webinar Monday night, and he sent in the question last Friday. This was last Friday right here. Intraday, he sent the question into me and said, I want to get short the Qs for a long-term hold. And he said, if it gets below 160.19, he saw something intraday there. And I said, are you insane? No, look where this market just dropped 10% in 10 days or whatever it was. So the biggest things that I see, especially newer traders, make the mistake, and I constantly hammer my guys. Where does it come from? Where does it have the potential to go? It's down 10% in 10 days. And you want to short it now? Are you kidding me? After it just undercut this low and then came back up through it? No, that is just the stupidest thing I've ever heard. And I have to say it in a nicer way, which just kills me. But tough love too. I mean, they need to hear that. It's like, should I buy a break above the year-to-date VWAP tomorrow is a question I might get. Are you kidding me? That's the potential. It just rallied from 157, to 168, and now you want to buy it on a breakout? So where has it come from? How much energy is expended? And where is it likely to go? Where is the potential to go? So back to your question with pivots, and what I try to find them useful for, or what I often find them useful for in a swing trade scenario is, especially that first day. Okay, you get involved in the stock, it makes a quick run. You don't know if it's going to hold or not. Most of the time lately they don't. So I always tell my guys, sell a third at daily R2 on a long. Sell, so that was a great one on BIOS. We bought that at 334 the other day. So this was actually, I believe this was a 2-day VWAP when we bought it. So here's the breakout. It held above that, I guess, and then here's that VWAP, and I told my guys they wanted to buy above this peak with a stop under here. So we sold some at daily R2, which I think actually was like, 57 cents or something like that. And then to trail the stops up on the swing trade underneath these higher lows, and then the balance was stopped out yesterday on that. So that's that's a one from this week that worked great. Obviously they don't all, but I always, even if it continues to go, I don't care, right? Unless the R2 is 5 cents away from your entry, then I'm like, well, especially on these lower price stocks, if it hadn't had a big range the day before, those pivots will be really tight. So I'll say, let's hold off, wait for R3, or wait for it to make a 2-minute low, meaning on 2-minute candles. If it keeps making higher lows on the 2-minute candles, stay in until it breaks that, and then sell that first third. So rather than just selling at the target, at the level. There was one today that I think, lithium, LTHM, I call it lithium. But this hit daily R2 and then continued to move higher. You know what it was? No, I had them sell some at 1850. That was yesterday's R2. So we sold some at 1850, and now I think so I've got them in here with a stop at this point. Neo, I'm looking at that one. This one, you guys probably know this name, but and we actually, this was one got stopped out before it hit it, but when we got involved here, our target, I said, listen, we typically don't do this, but we're going to sell it at the VWAP from the IPO, because look how far it's coming up to get to that point. And in my mind, it needed to do exactly what it's doing, which is now you can say this is building a cup and a handle, or an ascending triangle, or whatever label you want to put on it. But the energy's building again, and it's toying with this VWAP from the IPO. But you have to say, okay, is it smart to buy above that level? So for instance, where was I, 65 minute. So is it smart to buy up in that area yesterday after it had already traveled on this gap and then continued another 10%? Is it smart to expect that to hold through, or do we get that little shakeout and then now maybe we're looking to buy it? I think this is 821 right here. It is. So 821, I think it goes, but I think you could probably, maybe, if you're really paying attention and you want to build some shares, maybe you buy a little bit of it above this little peak from today. So, then I'll just look at those levels and say, well, here's, today's VWAP, and it couldn't get back above that. So it's a little, it's just building. There's a lot of eyes on this. I think that was Citron said that, that it's a buy. And I was going to tweet out, but I figured, I don't need to pick fights with anyone. I'll just observe it. But I was thinking, don't you know the VWAP from the IPO is right there, dude? It's not going to go right away. You got time. it's like I said, who am I? You know, I don't need to start Twitter wars. So he was interested in the VWAP from each quarter going back 2 years. So here's the VWAP from the election. That's the VWAP from the 2016 low. That maybe is where, you know, after this rally in Apple, maybe runs out of steam up here. Maybe it does something like this, is what I'm thinking. That, you know, that could be the level that it goes to, and then slightly undercut that. I mean, if things get bad for Apple, slightly undercut that. Something someone told me not too long ago in my chat room was, well, why don't we short there? You know, the trend, once established, is more likely to continue than reverse, and the definition is lower lows. So if it makes a lower low, why don't I want to short it there? Because you have to consider where it's come from first. It's not about shorting here necessarily. It's about shorting, you know, here as the moment, and then you got your stop right here, meaning you can do bigger size with the same amount of risk, and you're getting in at the onset of that move from a shorter term time frame. So trend alignment, you're just trying to get those trends aligned. So he was talking about, you know, Apple decides how much they're going to purchase in their share repurchase program. They decide that at the beginning of the quarter. And he's saying this is the most expensive buyback ever. That if you go back, so he wanted to go back to, I think, January of 17. So if we can put the VWAP on that, we are still above that. But if you put one on, for instance, 7 quarters ago, you know, the average price is below that. From 5, from 4, from 3. So what does that tell you? It tells you that Apple, their share buyback has been costing them money. They're underwater on their share buyback. So here's a guy who managed billions of dollars as a head trader, executing 1 billion shares a year is what he told me for his book. That he's, you know, big money is looking at it this way. Now he said, I can't get this stuff on, why can't I get this on Bloomberg? So I talked to the Bloomberg guys today and said, listen, let's get this stuff out there. Anyway, so there was a point to all that circular talk.
Yeah, a question regarding the VWAP on the open. Like in the first 15 minutes, volatility is higher. Some people say it's like a little skewed. Mm-hmm. What's your opinion on that?
It is. I mean, it's super sensitive, right? I mean, you have one period of data at minute 1, 2 periods of data. Generally, you know, maybe 15, 20 minutes for it to kind of filter out. And then, like I said, so if it comes down to the 2-day VWAP, and then today's VWAP is declining on it, it starts to flatten out as it, you know, bases on that 2-day. Then, you know, to buy it from there, put a VWAP on the peak from, so maybe it gapped up, ran a little bit, and then came in. So I'll put a VWAP on where it opened, the high there, and then the low here. And they often converge together as well. That, you know, maybe not the initial move, so you're buying it off the 2-day as it comes up from the 1-day, and then it hits the VWAP from the peak that morning. And then it'll come back down, test today's VWAP again, and then often the VWAP from the low will be there as well. I know it's kind of, I'm asking you to imagine this in your head because I don't have a good example from today, but that's often the way I'll handle it, in particular if it's a volatile opening for that stock or that market, whatever it is you're looking at to trade.
Okay. Second question. What are your thoughts on using VWAP from pre-market versus VWAP like right off the open?
I do use it if it is significant volume only. So I'll have it. If it's just ordinary trading, then it doesn't really seem to matter. But if there was news, absolutely. I mean, if it's a stock where there's news, it's an in-play stock, then yeah, absolutely, you should look at that and probably keep it on till at least maybe the first hour of the day, because if the stock trades 1 million shares a day on average and it trades 200,000 shares in the pre-market, by 10:30 a.m. it might have traded that 1 million shares, its average daily volume in the first hour, and by then the pre-market stuff is kind of trails off, in the calculation because it's further back. But it's good to be aware of that level. It's kind of like knowing the intraday, pre-market highs and lows, right? You want to be aware of those. The markets often, revisit them. If the stock gaps way down, right, it gaps from 30 down to 22 in the pre-market, rallies up to opens at 24, and then it gets back below its VWAP. It'll often come down and retest that 22. So you want to be aware of the pre-market low and say, okay, let's watch how it acts in here. Is it going to go slightly through, hit some stops, and then run back up, or is it going to fall just short? You want to be aware of those levels for sure.
And then how are you managing your trades when you take them based off the VWAP?
I generally am not in a whole lot of stocks at once, so I'll just kind of watch it. But I will often put in a stop just because I might get distracted by a question or whatever. So I'll put it generally underneath that prior, that little low that I'm anchoring off of.
Okay. And what if you're stopped out of the actual position? When do you re-enter? Or do you re-enter?
I do. So sometimes, you guys know this, sometimes I'll look at it and say, am I being persistent and like a good trader who sticks with it, or am I being just stubborn and I should just give up this stock? Sometimes, generally 3 is I call it at 3. I'm like, the stock has me. 3 strikes I'm out. Often I'll look at it. So let's say it was the stock gapped down, hit a pre-market low of 22, opens at 24, and then comes back down to test it. If it goes to 21.98, shows a lot less volume, and maybe starts to come up and make a 2-minute high, then I'll start to look at that. Off the 2-minute candle, that is. I'll look at that and maybe say, okay, I'm going to try a long in here for a scalp, but if it turns into something, I'll start, if it gets back up to today's VWAP, I'll generally, especially if it's like a 50-cent run to VWAP, then I'll just sell the whole thing. And then I'll look to reestablish if it comes down towards the VWAP from that low. But intraday lows, when you have them, as I said with the SPY on that 1 minute, that they often do that little jig off that low. So below the VWAP from that low. So for instance, what I was talking about was this little low right here. So off of the morning low, which was the daily pivot, it then broke underneath this VWAP. So right over in here, I'll generally look to get involved, is if it breaks above this little peak right here. And then my stop would be, let's say, just below that level. And what I would look for and hope would happen would be, it didn't do it here, but maybe it would pull back a little bit and then get going. And then as it makes these higher lows, to trail the stop under this low, and then as it pulls back, I'm not stopped out, it starts to move again, stop goes under this low, pulls back and begins to rally again, then stop goes under that low, then under this low, and then, out right there.
Do you personally take into account the slope of the intraday VWAP?
I do. Great question. Yeah, the slope of it is very important. When I'm looking for a long, let's say pull back to the 2-day VWAP, and it gets to today's VWAP, if the VWAP is still at a pretty steep angle lower, I'll wait. I want to see it kind of flatten out and show that there's evidence that the battle is actually occurring there. So if the battle's occurring in there and it starts to flatten out, now I know it's becoming more neutral in that area. Whereas with the steep VWAP, it says there's very aggressive sellers in here. Now it's becoming a little bit more balanced, and it's back to the buyers can easily regain control because the 2-day VWAP's being defended. Yesterday's buyer is back in here, and now we've got it more neutral here in the morning. That is worth a lot. So it'll be, so in the first 15, 20 minutes where you get a lot of these types of entries, it'll start to flatten out for maybe 2 to 3 minutes, and then I like to see that better because it says it's not emotional buying just causing a little spike, but whenever you have a little consolidation prior to your entry long or short, it gives you that much more confidence that you've got a level that it's been tested and challenged by both sides. So if it breaks back below there, you're either stopped out or you decide, hey, I'm gonna fade this thing, I'm gonna reverse. I generally don't do those trades. That is the reversal trade, because I'm not good at flipping bias like that. When I see that it broke out on a daily chart and it's holding the 2-day VWAP, I'm not good at saying, okay, I'm going to lean into it. I'd rather, my mind is it broke out on some catalyst in volume and the buyers have control, and it's kind of just a personality quirk, because those can be great trades, right? From failed moves come fast moves, but I'm just not wired that way for whatever reason.
What's your average holding period? Are you more of a day trader?
I like to swing trade. I'm 51 now, and I've been doing this for a while, and I think there's a definite correlation with age and the number of trades and holding period. That is younger, and then you get into that period where you're really hitting it good, and you're trading several 100,000 shares per day. Now I'll do 20, 30,000 shares a day on a pretty busy day, unless they're low price stocks or whatever. But just in the medium price $20 to $50 range. I prefer to swing trade, but I have a lot of day trading habits. Those day trading habits, though, have helped me tremendously by being able to not just say, hey, I'm gonna hold it for a swing trade. It's not up to me to decide how long to hold it. I'd like to hold it for 5-6 days, but if the market tells me that it makes a lower low, let's say on a 10-minute chart, so we ran up $1, pulled back 50 cents, runs up again, put my stop under there, and continue to stair step up, put my stops under it. It might be 3 days, it might be that afternoon. So I like to swing trade when the market lets me. And it seems like in the last year, it's been less willing to let me hold swing trades.
So for periods like, let's say October, is elevated volatility, how are you, holding your positions, or how are you, transitioning your trading plan for that type of environment? So when the market's declining like that, I will automatically, be finding short trades, because that's what the market's presenting. So I don't look for longs, I don't look for shorts. I look for opportunity. My process is to take something like this. So this is a laptop, of course, but I have more screens at home. And I'll go through a long list and look for, a tight range like this. And then we've got these higher lows on the right side. And, so these are potential opportunities. This one just undercut the prior lows, HUN, and it's not really consolidating yet, but it's bumping against this 5-day moving average. This should probably be, like on a 10-minute. I don't have all my screens in front of me, of course, but I'll look for opportunity and say, where. So here's one that failed at the 2-day VWAP. I was watching this one this morning, and I wanted to buy Billy, because this one has been battling its IPO VWAP, and each time it gets up through it, it's been extended. So I haven't really gotten into it, and I missed this move right here. That was the move yesterday. Obviously, we can look at that, but it gaps up, it holds, it gets back, it has this little shakeout, and then gets back above that VWAP, which is flat. That's generally a good entry that I would consider for a swing trade, and I would sell some most likely just if it breaks out, right? So that breakout, if it's run 5%, and then you get the breakout crowd coming to it, it's always good to feed some out, I think, because they often don't hold, and then you're in a position of strength on your balance. And then it breaks down below that VWAP, you got to get out. But I was looking for it to bounce, so that was this morning. I was looking for it to hold that 2-day, but it didn't. So, it's a great trade avoided as well, where I had it on my watch list. And what I'll do, is I might set 30 alerts before the market opens.
on let's say this is my list of stocks on the left there. I might set an alert on each of those stocks, and that alert will tell me, okay, start watching this thing. If I think it's breaking out at 1550, I'll set an alert at 1545. So I'm prepared for it. I'm not the guy who's chasing it. So I'm prepared for it. I'll pull it up in a level 2, start watching it on a shorter term time frame, saying where's my risk, what do I have going on here, and then I might readjust it. If it just kind of sits there for a while, I'll say, okay, well, I got to pay attention somewhere else. I'll set that stop to 1548 now. So next time if it gets a little bit more momentum. So I'll set a lot of alerts, and just some people think an alert means that's where we should buy it. An alert is just what it is. It says pay attention, be alert. It's at a level where something significant might happen. So now's the time to pay closer attention and watch the shorter term time frames, watch the tapes, see what's happening in there.
Do you use simple or exponential moving averages?
I use simple, mainly because that's what most people use, and I don't use moving averages as a system, but as a level of interest to say, okay, now I want to pay attention in this general area. So a 10-day simple moving average is going to be in the same spot within cents as a 10 exponential. Same with the 20s and the 50s. So what are most people using? Because why else do moving averages work as support or resistance? Because they become a self-fulfilling prophecy. The sellers stop selling down to that moving average, buyers start to bid in there. So that's the level of interest. And with it, if I get interested within a 5-cent range because it's simple or exponential, it doesn't make any difference, generally speaking.